Well, this was a very loud message from the Indians to the new government, saying that the economy matters, growth matters, inflation matters, and that the time had come to take serious steps. Like others, I was very taken aback by the extent of the victory. If my reading of Indian history is correct, this is the first time since the 80s that a singular government could, if it wished, have such a large majority on its own. Of course, it may go for a coalition. It is also the first time that a non-Congress party does so well. So this is a historic event, a government coming in with a very strong mandate to do something about the economy. And that is why people both within India and outside are very excited.
Right, but with this win, Mohamed, since last Friday, do you find yourself thinking and talking about India a lot more? Has the magnitude of this win increased the focus on India in investment circles?
Absolutely, absolutely it has, and rightly so, because you do have now a very clear mandate. Now, because I'm a worrier by nature, I would caution, it's not as if everything is easy. You have an upper house that needs to go along, you need the states to be able to inline, and most importantly, the government will have to move on its appointment. It will have to take advantage of the budget to announce a very bold economic program. So there's a lot to do, but like everybody else, one cannot be impressed but to see how loud the message from the Indian citizens were.
Also, do you think that the new government has a timing advantage given that the business and market outlook is turning positive globally? So with some amount of diligence and good policy making, India's profile as an investment destination can actually lead within emerging markets?
So in the very short term, the answer is yes. In the very short term, the Indian government will find that the external winds have gone from being headwinds to being slight tailwinds. And that's the good news. And the government would want to take advantage of that. However, over the longer term, it's really important that India control its own destiny because the global environment is more uncertain. The West is having enormous problems getting to lift off economic growth. And India hasn't been taking advantage of the amazing opportunities that global markets and other emerging markets offer. So I would say, yes, there may be in the short term a cyclical tailwind, but the reality is that the secular outlook is still headwinds from the global economy. So it's critical that India control its own destiny.
The other talking point, Mohamed, is that with the recent developments on macros and politics, do you believe India has averted a ratings downgrade conclusively? So much so that now there is talk about how with productive policies and revival in growth, we could potentially see a ratings upgrade. And it is important because India right now is at the lowest level of investment grade.
Yeah, so the rating issue is very important because they trigger almost automatic reactions from investors. And it's not just financial investors. Let's also forget that those who invest in plant and equipment in India, those who hire people on the ground, they look to the market measure of risk because they put that in their projections. So the credit rating still plays an important role. So you certainly want to avoid another downgrade. I don't think the rating agencies will move quickly on an upgrade until they see actions being taken. I don't think that they'll move on words. They'll want actions.
All right, Mohamed, let me get your views on the Indian economy then. There is much focus on growth revival in India. From the peak of 8 to 9%, we are struggling to defend 5% right now. Even though policymakers feel we have seen the bottom on growth, what is your own outlook on how the growth trend may look like for India going forward?
So you're right. Sub 5% growth for India is the equivalent of a recession elsewhere. Add to that inflation, so the stagflation that India has experienced more recently is a real problem. And there is no reason why India, with its opportunities and capabilities, cannot move on both sides in terms of growth and in terms of inflation. Now, the central bank has taken some very important measures that will help, but what they've done is necessary but not sufficient. The government now has to deliver. Now, there are lots of pro-growth steps that can be taken, and there's also need to build some more flexibility in the budget. If that happens, I think India will be surprised by the extent to which foreign investment responds. There's a lot of people that are interested in India, not only because of what it constitutes in terms of a market, in terms of the talent, but also because of its location in terms of knowledge and what it's able to allow people in terms of productivity gains. So if the government is able to move on growth enhancing, productivity enhancing steps, and they're not easy, but they've been well identified, if the government is able to move, I think people will be surprised by how quickly foreign investment responds.
You know, since you mentioned the currency, do you have a specific view on the Indian rupee? Among emerging markets, it's done pretty well. It's gained about 12 to 13% from August 2013 lows. It's been one of the better performing emerging market currencies.
So it's one of the best performing because unfortunately it was one of the worst performers, right? So you've had that V, and it's an important V, right? And a lot, whether the call of whether it's fairly valued or not has a lot to do with the sorts of reforms and the sort of budget that Mr. Modi's new government will introduce. What I can tell you is India wants to avoid these roller coasters. It is not good to have these roller coasters in the currency, because companies not only look at the level of the exchange rate, they look at the volatility of the exchange rate, right? So you want to reduce that volatility in order to be able to secure long-term investments, and that can assist India's own efforts.
Specifically talking about India, you know, the stage at which the market is right now, do you think that we are pretty much going to extend ourselves into a secular bull run from these levels, one that may extend out into 10 to 13 years? Much like what the Dow did between 1987 to 2000, when the Dow actually returned 600%.
So for that to happen, two things are needed. One is delivery on growth promotion, lower inflation, and broad financial stability in India. But that is not enough. You also need a very conducive global environment. I think the lesson that India and many emerging markets learned is that they are on the receiving end of the volatility that's exported by the Western countries. So whether it's the European crisis, whether it's Ukraine and Russia, whether it's the Fed changing course in the United States, emerging markets are on the receiving end of this. And this is important because India, if it does all its work, will also need to be in a supportive global environment. I tell people you cannot be a good house if the neighborhood is volatile. You also need the support of the volatility. So the bet on this is the beginning of a long-term secular Indian bull market has both a domestic component and an external component. And it's very important to remember that. Okay, it's not just a domestic component. India should have better control over its destiny, but it still lives in a global village, if you like.
Catch Mohamed El-Erian on India Decides, the FII View. Only on ET Now.